Hello traders, welcome to this live intraday strategy webinar. Today is Thursday, May 12th. Good to be with you guys this morning. Eileen, Graham, Pete, Nazia, Mark, Kelly, great to see you guys in the room. So let's just jump right into the BOE. Some interesting commentary coming out of Carney, an overnight trade. We'll go over some of those comments. Not really giving us too much play on the sterling dollar, but sterling yen just coming off resistance right now, and I want to kind of jump into that early in the session. We'll go over the Aussie CAD, kind of lackluster at this point. Euro Aussie coming into that area of resistance yet again. And as always, guys, any questions or trade setups you guys want to review, feel free to throw it on the message board. So, quick look at the performance of the U.S. dollar before we get started. Here's what it looks like ahead of the U.S. Open. Broadly stronger against most of its major counterparts. Again, pound slightly towards the upper side of the weekly opening range. Nothing to write home about just yet. We'll go over the levels in the pound. I still think you can get that stab to the downside before it rebounds, but largely, that downside bias is at risk here as we get towards the lower parallels. Loonie not really doing much, up just 0.08%. Biggest mover is actually dollar yen, and that's down, or yen is down. Dollar yen up 0.81% on the session, so we'll definitely take a look at that pair as well. Dollar index looks like this. Still have resistance a little bit higher from where we are just now, 11,914. We talked about this level yesterday. The trade remains constructive still while above that 11,830 level. One thing I was just looking at earlier, and it's way too early to add this right now, but if this ML is in play, the upper median line converges on that region either way, or just there above over the next day or so. So either way you look at it, you're looking for some dollar strength to teeter out towards the end of the week. Remember, on these opening range breaks, it's only fitting. You make the break, you look for that late week, Thursday, Friday high, and we're getting there at this point. The 30-minute chart for the dollar index hasn't been inspiring at all, and this is why we haven't really been following it so much. Since the start of the week, you've just made an opening range break. That's it. Here's the weekly open. You went to a Monday, Tuesday stretch to the upside, tested the lows. Here we are again. So there's really nothing to do here on the index as far as a conviction near-term bias, but noting that 38.2, that ML that could be in play, let me add it just here to show you what it looks like on the 30-minute, does highlight possible near-term resistance here on a move higher towards the end of the week. So for the Dow Jones FXCM dollar index, again, although we can't necessarily trade it here stateside, can be a very good barometer for base dollar movements, and we'll continue to track this one heading into the close of the week. Any questions on the dollar index before we move off? It's been a boring week on this pair, kind of just holding that range. Okay, so let's just jump into the pound real quick, and then I do like pound yen more so, but let's just go in order, I guess, for the event risk that just happened. Commentary from Carney was right in line with what we talked about yesterday. And here are just some highlights. Again, quick reminder, anyone in the room, you can always take a snapshot of anything you've seen here on the webinars by clicking on that camera button in the top right-hand corner. But the major takeaways that we warned about yesterday, the fact that basically it's, the Brexit threat is still the biggest concern. So we talked about the Brexit may cause higher inflation, lower growth, may cause the pound to drop sharply, quote unquote, would increase uncertainty and weigh on economic activity. The biggest takeaway is the fact that they said that it could stoke inflation even more. It cut, obviously, their growth forecasts lowered for 2016 from to 2%, excuse me, from 2.2. So not a very bleak outlook, but at the same time, sort of all padding around that Brexit threat. Now, interestingly enough, we were looking at this last night, the overnight index swaps, which again is kind of what markets price in as far as interest rate probabilities moving forward. And just to see the change from last night to today, the December print here coming in down to 30%. Okay, back from 39, almost 40% yesterday. So this is the probability of a cut. Okay, so markets have actually priced out a little bit lesser of a probability that they'll move to cut rates. Remember, we were actually under the expectations that the BOE might start to normalize policy this year. Overnight index swaps have obviously been saying a completely different story all year long, but that probability of a cut further deteriorating or getting contracting is going to be near-term sterling positive, and that's exactly what you saw. You saw the pound basically move into the opening range weekly highs and a failure there. So moving forward, again, you're going to see these comments and headlines flashed all over the place today and all the financial news publications. The biggest takeaway is basically they're keeping everything soft heading into the referendum, and they really just wanted to sort of pad everything around the increased importance of this vote. Keep in mind, realistically speaking, in the event of a Brexit, which I don't think is going to materialize, but if it were to happen, probably the bigger play would be in the euro, more so than the pound. And we'll go over that as we get closer to the June vote, but sort of a picture of what the central bank is laying out. Where does that put us in price action, more importantly? Here's what the pound looks like now. So on the daily chart, you're kind of still holding the same range, the same levels apply, there hasn't been any change. You're still trading within the initial weekly opening range now. So even on a near-term prospect, you haven't gotten any directional break. But constructive above 43.46. And again, that's that swing high from April. And also that swing low from January. Lower median line parallel. And we do need to see a push and close through that 44.80 level to get this thing going. No change. This is the same chart, guys, that we've been following since last week. So again, just to put things in perspective where we are, here's what the 30-minute looks like. And it's kind of like, oh, it's pound yen. From last night, really no change, right? You saw the BOE spike right into the highs and it came right back off. Right now you're trading just above the weekly open. So the name of the plan was still to try to get on a long position for a swing back towards the 50 line, 46 region, of which again, you'd have to reassess. Jamie loves this trade to the upside as well. He's looking for a little bit more of a concrete support down here. I completely agree. Our bullish invalidation level is still going to be at 43. Okay, that's a 618 off the lows from April. It's also 50%. This is off the entire yearly range. It's a little bit more of a critical level. And that would necessitate essentially a break of this formation, which caught the highs. So pretty clean levels. We just got to get this thing to finally make a move. When is the June vote on Brexit? Beginning of the month? Good question, Eileen. I don't want to quote you the wrong date. I do think it's towards the beginning of the month. I'll get back to you. I'll look that up for you. Is that right, Pete? Yep, and Graham. Thanks for that, guys. 23rd. No worries, Eileen. Thanks, guys. I appreciate it. So I don't want to beat this trade up to death because there's really nothing going on here until we get this break. Do keep in mind that the line that you're seeing right here, although it's not it's a little bit ahead of the weekly opening range. It's the March high day close, and that's kind of why we were initially been watching that level for quite some time. It's right here. So I'm still going to work with that as where I need to see a close above to really get this thing going. Look to play a rebound back towards that median line there, and then we'll need to reassess where the pound stands at that point. Also note that the momentum signature should also give us a nice tip here once we finally make the break, as we've continued to hold largely 40-60 since the start of the week. So you're in the range until you're not. All right, moving right along, pound yen, and this is a little bit more of the meatier, juicier of the two. Much bigger ATR, 214 pips on a daily basis, so always keep that in mind, guys, whenever you jump into the positions. Big support that we came off of earlier in the week, let me go back to that daily chart real quick, was right here. We talked about that 54.45 level earlier. Here's what pound yen looks like on the daily chart. Okay, and here's what it looked like last night. So 56.36 or 35 rather into 56.18, this region right here. This is the low day close that you saw for February. And this is a broader dated 50% retracement, much longer term. This extends off the lows that you made, what was that, 2011. Okay, so a really nice pivot in price. Also note that just below that you had basic MLP support. Here's what pound yen looks like on the 30-minute, and this is kind of my favorite setup so far. So remember, we were looking at this last week. We talked about this at length on Tuesday's webinar rather, so I don't want to beat it up again. Really nice pivot right along the lower median line, a break back above that 55. I think at that point we were still looking at the swing highs near 55.80, gave you the upswing. Here's the pair finally coming into that last target from Sunday's update, 58.20. We just hit it. That's a 50% retracement from the decline off the monthly high, or last month's late swing high, I should say. And also is a basic sliding parallel here. So this is the actual 50 line or bisector of the broader formation. And if you just take a basic parallel, and this is a good drill to do in general, guys, just to kind of gauge how accurate or how on point the slope is. You know, just take some parallels and match up the advance and see if there's any really nice delineations or pivots off that level. And we've been working with this slope for a while. Looks pretty decent. Long story short, it converges right on this region here. Okay. Note that that rally also came in on some divergence, really slight divergence in momentum. Bring into a line chart. Price action makes a higher high. The oscillator makes a lower high. So you got to be careful here for a possible exhaustion trade near term. Still love the upside. I think, again, Jamie was looking for a little bit more of a deeper cut here to get on the long side from a swing perspective. I loved an entry near 55.70 for 55.80. I said that in last night's update. Didn't quite get it. It turned out to be the low right at 56.30 when we published. So if you missed the upswing, no worries. The market will always offer more opportunities. Like I said, at this point, we need to just reset some of our levels here. This extension here will no longer be valid or needed, so we're going to get rid of that. Obviously, the retracement off the low is always going to need to account for the new high in price. It's too early to rely on this retracement by any means, which is why we'll keep it in light gray. I'll usually try to color code the retracements, guys. If it's kind of a speculative or really near-term retracement, I'll keep the tone really light. Obviously, this is the sort of standard. But in any event, we'll want to adjust that if we do make a new high. Long story short, I'll be looking for short triggers as we get into this high into the U.S. Open, specifically if you get a nice opening range break in U.S. trade. On a pullback, you're half leverage here because inevitably you'd love to be on the long side more so than the short side. Okay, but I think it's at risk here near term for a little bit of a pullback. Questions on sterling yen? Sterling yen, at this point now, are you still looking for a pullback to continue long? Yeah. So if anything, none of the levels from last night have changed, right? We just take the retracement to the new high, but you're basically still looking to stay constructive above that 618. That moves us into 55.40 here. There's not really much event risk left for the week from either pound side or the Japanese yen side, so you're going to kind of have to just gauge price action moving into the close of the week. But price action that you've seen off the lows here is pretty indicative. You know, you'd be looking for a stretch into a new high. I would love to see kind of at least 59.22 on this upswing from the monthly low. Also keep in mind, one thing is that this is kind of a very simple initial monthly opening range break. Here's your May open. You test that high a couple of days later on the 4th. You test it again and close below it on the 9th. 10th breaks. The next day tests at support, and then you rebound higher. So on that upstretch, I think you got more to go. It's just the immediate upside focus is at risk near term below these parallels. Make sense? Okay, so that's pound and pound yen. Just want to touch on Aussie Cad and Euro Aus. We've been following those. You're more than welcome. Cheers. on that. We've been talking about the those $3 crosses on the updates for a couple of days now, but they haven't really just given us much volatility. I gave you an update on Twitter on all of these yesterday, so I'm kind of just going to run right through them. Here's the Aussie dollar first. And the basic premise of this trade coming into the start of the week was, again, the threat of a near-term rebound off the lows. You had a lot to look at right here, stacked just ahead of the 73 handle. Obviously, 72.80 being the 2016 yearly open, which is always going to be an important level. So the daily chart, not all that awe-inspiring. Here's what the Aussie looks like near-term. Here's what we looked like last night. I mean, you kind of came into the median line and rode it down right back towards last week's low. You're still in the opening range for the week, guys. I don't have anything on this. I still am looking for the upswing. Would love to see a breach higher and towards a rally sort of towards 74.50, of which short entry in my book would be a beautiful spot. But you know, the ATR has been contracting. There hasn't been anything. Tomorrow's retail sales data is probably going to be the biggest thing that you want to pay attention to. Finally get some dollar price action that could inspire something. But just be on the lookout here for a move higher. Obviously, the broader downtrend is still in focus. It's just that you're coming into an area of exhaustion. Very simple sort of rebound would give us a nice opportunity to get back on the short side here for Aussie. Again, here's what it looked like earlier in the week. So levels are unchanged. And when the market gets into these lulls, guys, where we have a lot of cross action, this is not a time that you need to completely shy away completely. My reluctance in my voice, if you're picking that up, is just these are not trades that you want to get into and ride. Okay, every time I've tried to do that this week, I've taken a break-even stop on the rest. And it's frustrating, right? Because you have 25 pips, you have the 30 pips, it's got a decent leverage. This is the market where you kind of just want to in at support, out at resistance, in at support, all in, all out. And, you know, if you get the break, so be it. You know, it's going to be kind of frustrating if you're not in it, but at the same time, there just hasn't been any directional breaks in any of these dollar crosses this week yet. And with the dollar index doing what it's doing, we just talked about that earlier in the session, I think you'll get a little bit more clarity once we finally clear some of these ranges. So of the two, Aussie dollar and dollar CAD actually ended up being the one with a little more kick to it because it actually finally cleared the weekly opening, the initial weekly opening range. Okay, and that happened yesterday. So we came into the week looking for short triggers while below 29.80, 29.73. We talked about it in the webinar, that false break and quick recovery early in the week on Tuesday. And here's your opening range low for the week. You cleared that, tested it as resistance, moved off. So for dollar CAD, you look for a Thursday, Friday sort of low to attain here, just on account of a basic opening range strategy. Can you go to the 5 minutes to show some of your entries? I haven't taken anything on dollar CAD. I missed the entire move on dollar CAD. I've been focused on the sterling yen. Sterling dollar, like I said, I would love to be on the long side. I thought that cut last night would give us at least a spike low into the BOE today, but not always going to pan out. 27.78 near term support structure here for dollar CAD. Stay bearish below 28.77, which is a 50% retracement. But more importantly, guys, it's just that session high that we made, excuse me, in overnight trade. So I'd like to stay the immediate downside bias below that. Keep in mind, again, just going to zoom this out real quick to show you the parallels that we came off of. Really clean. Basic trendline resistance or channel resistance. It's a 4-point touch. 1, 2, 3, 4. Extended off the high from January. It's basically what we just came through and came off. So yeah, expect some pullback. expect some pullback. Okay, and this is what the daily chart looked like on dollar CAD as we came into the start of the week. So that key resistance there at 29.85, really nice hold. Obviously it probed right through pretty quick there, but nice hold. So on the daily chart, what you'll want to do, excuse me, just highlight sort of your key fibs. As sort of areas of interest of which we'd start to look for a little bit more of a basing price action. Remember, this is huge. This was a huge multi-year trendline support, huge Fibonacci confluence. I mean, you name it, it was stacked up here. I don't want to go over this again because we covered it on Tuesday pretty in depth, but you're still working with a broader upside bias. So even on a more substantiated pullback, you'd be cautious about favoring the short side for too long. All right, so near-term targets 27.78 as you head into 27.36 and specifically 26.90, 26.70. I'd be starting to look for possible long exposure, possible long triggers in dollar CAD. And you also just start to look for some structure to the decline, and that's not just because for entries or exits, but where you would invalidate the near-term short bias. So as we just said, we want to stay bearish below this. That's cool. A basic 3-point resistance trigger, resistance line also converges on that region. So let's see if we got any parallels off that. I'm not going to stress that too much, but could be something in play. All right, and again, we won't stress the lower parallels, but the upper parallels of which converges on the levels that we've been using as our invalidation is always going to be something that'll be helpful. And you can treat this as a near-term sort of bull flag as well. So you get some divergence in momentum into the lower parallels or a nice fib retracement, be a really nice entry for the rebound. Likewise, if this thing does rebound towards resistance, momentum holds at 60, you get a nice short trigger from there to get that last low towards the end of the week. A lot of different ways you can play this, but the long story short is you want to keep a downside bias sub 28.80 in the near term. Questions on dollar CAD? That's Aussie CAD, Euro Aus. Also covered earlier in the week. Here's what Euro Aussie looked like back on the 8th. We were looking at 55.70 as a major area of resistance, looking for some possible downside play off that region. Just above at 56.37. Is the near-term bearish invalidation level for the possible turn here. We're just off those regions still at this point right now. Here's what Euro Aussie looks like on the daily chart. Same resistance level in play, 55.70 on a closed basis, can't touch it. And here's what it looks like on the 30-minute. There's that 56.37 level still in play. Very similar to the boring pound trade in that you just made a simple weekly opening range. That's all you've done. Here's your Monday open, or Sunday open rather, stretch into a high, you test the lows and fail, test the highs and fail, you're in the range. Now I keep trend lines like this just for my benefit because sometimes you'll see some really nice reactions off it, but the broader region or the broader focus still remains on that opening range. Now, haven't operated on this too. I think I put a position on Wednesday, but I haven't gotten too crazy with this position based on one thing, what we're seeing in the euro dollar. And I want to jump over into the euro real quick because the levels that we put out last week are kind of still the same exact levels that are in play. The daily chart, not too hot about 30-minute. These levels have still continued to react like textbook. So that May high day close basically caught yesterday's rally. The fib confluence that we talked about last week at 113.56, 113.67 caught this week's low. And I'm not too confident about this pitchfork yet, but the median line does also still converge on that region, which gives you key area of support, basically. So you know the levels to beat on the downside to get the resumption of the downtrend. Until that happens, you're still at risk for a possible rebound here in Euro Dollar. So that's kind of what's put me on pause on Euro Aus. And to go back to that one real quick, you know, you've been marking, not crazy about it, but some slight divergence into the highs, really clear range. I'd be inclined to actually just take sort of if we take another rally or stab at 56.37, I'd be really interested in possibly looking for some short exposures off that. That'd be a nice 1618 off the low, very clean. And for what it's worth, that pivot that we just came off a couple times is right there heading into the US session. But you kind of get the picture here for Euro Aus. We got to clear these ranges. We have to clear these ranges before we can get some conviction on this. And Euro Dollar again, just for anyone who needs to take a snapshot. Last but not least, Aussie Cad was a trade that we covered earlier in the week as well. Made a break to the downside. Another one where it was opening up not only the monthly opening range, but the weekly opening range right above confluence support, and that was like 98.480. It extended into 94.50, which was the low that we made here. Long story short, it's a clear-cut break here, and you've already made next key support target. So if you didn't get into this one or you missed that break in overnight, there's really nothing we can do at this point. Expect a lot of chop, a lot of rebound off this region, but I wouldn't be interested in playing long at all at this point. 93.90 into 93.93. Just want to point out how critical these levels are. This is a long-dated 618 extension. Sorry about that. From the highs that you made in 2013, so off the 2013 decline, it's your 618 extension. It also caught the exact low that you made in late 2014. Really nice pivot in price. And it's also the 764 retracement of the advance off of the September low from last year. So nice three-way confluence there of a yearly low, a 618, a 764. Sorry about that. Doesn't mean it's going to be rock solid, okay, or cause reversal or anything, but definitely give a moment for pause here. I'll be looking for a rally to offer some nice opportunities to get back on the short side. Here's what the scalp looks like. Again, we were looking for this consolidation break. I think it's a clear-cut break that we got there yesterday. So here's the move to the downside there. Again, initial support. Look for a rebound. You want to stay bearish at this point, sub 94.50, which is now the monthly opening range, objective as you can be. And also the former, zoom out to show you the origin, the former lower or median line, excuse me, right off the highs. Okay, all of that's right back up here. And there's, as far as downside targets beyond here, there's really not much until you get back into like 93, 92.60 would be next areas of interest on the downside. Any questions on Aussie CAD? Okay. As far as some of the other broader trades that we were following in the commodity block, crude and gold have both been sort of making major headlines these last few days. Start off with the gold trade. Gold has actually been exceptionally clean on the near term price action. If you guys remember this chart from earlier in the week in gold, we proposed this near-term pitchfork just off the highs. Again, you noted that it really didn't have really all that much justification to use it just yet, except a couple of different things. You had a really nice reversal off of 50 line for the current operative structure that we were in. From a fib level, I don't recall exactly what level that was, but 1293 was also the 2015 high week close, so a level that we were watching inherently. And you start the week at resistance. Turns out that slope continued to play out throughout the week. Here's what the 30-minute looks like. Well, I guess here's the daily first, just to show you where we are right now. This is still the upslope that you're looking at right here on the 30-minute chart. But here's what the 30-minute looks like for gold. Just really clean. Just continued to play out throughout the entire week. Once we affirmed this high, 100% extension highlighted 1260. It's really close to where you bottomed, right along that parallel. On the rally and the upswing, you'd look for the convergence of that 50 line and the upper median line. That's exactly what you got. And you came just off. So, nice story, Mike. Where are we going from here, right? At this point, you still want to be mindful of another stab at that lower median line parallel. But once we clear this, we're right back on the upswing for gold, okay? And that kind of matches or right with what we're looking at in the dollar index, right? Dollar index, make a stab at that 38.2 retracement, maybe that upper parallel, and then show a move to the downside, which would, again, give us some alleviation here for some of the downside in gold. But the levels have panned out really good. I'm working with a basic 618 off the high that highlights 1286, sort of the level to beat, sort of like the ideal scenario play. Would take you past 1293. Again, that's that 2015 high week close. And then hopefully this puppy can get a little bit more juice towards some fresh highs. Now, the invalidation level for the long side of trade for gold, just for your information, to go back to that 30-minute, it's still going to be somewhere in the range of 1254. Okay. So 50% of the entire retracement, but not just that. It would require and necessitate a break of the May opening range lows. And keep in mind that you know, on the daily prospect, I keep switching back and forth, sorry guys, but on the daily prospect, you know, you have been marking some divergence into these major highs. You're up near the upper parallels. You know, a break of this formation could trigger a drop all the way back down to the median line, and that could take you all the way as low as 1205, and that would wipe out a lot of hands. I don't know if you were watching CNBC or even paying attention, but long exposure and open interest on gold futures contracts has peaked to record highs recently. So, you know, these are all things indicative of sometimes of near-term exhaustion. And I wouldn't be surprised if this formation breaks to the downside, see a little bit more of a corrective action in gold. So from a near-term prospect for our purposes here, if you do see that downside break below the monthly opening range, specifically 1250, you know, you'd be looking for a much larger correction, in gold before you start to fix or reassert the long side. Any questions on gold? You'll be seeing this chart, I promise you that. Oil looks like this. This thing is a beast. If we do close above these levels today, this is basic 50 line for that long dated operative structure we were working off of on the 2015 highs. If we do close above that, your next topside target is actually the 618 of the entire decline. That's like 4860. From structural resistance, you could go up as high as 5090. I definitely would want to see what the high day close is here. Bear with me one moment. 49.49. You got some topside targets there you'd be looking at, but I'm going to be very interested to see how today pans out, guys, because again, this is not only the monthly open that we're pushing through, but the monthly opening range high. So again, objectively speaking, would be a pretty bullish development near term. Remember, the game plan was kind of find some support near that lower parallel. I guess that's as much of a tease as the market will give you. Just a couple of cents off there. Questions on crude? Wow, we kind of flew through these today. All right. Upcoming event risk is limited. Again, tomorrow's retail sales data is the last thing on tap this week. Hopefully get a pickup of some of the stuff or some of the economic data as we get deeper into the month. Why do you think oil is still climbing? The fundies before still seem in place. That's a good question, Eileen. That's why we don't follow the fundies, right? Look, the fundies have been in the same place for some time. In fact, if anything, there's talk of excess production now because you're getting more production coming online from the Middle East. The funny thing is, everyone was talking about, obviously it's a horrible scenario, and our prayers go out to everyone in Canada, but everyone was talking about that fire, and that was going to cause the fuel the rally. Look, we've been talking about the crude advance since the start of the year, Eileen, right? And there's been nothing bearish. And every time we've highlighted a bullish invalidation level, the market has turned ahead of it. It happened last month, specifically right here. I didn't even change this chart from last month. This is actually after my injury. So this is a basic parallel that we extended off the April low. It literally caught the low to the pip, right, in the advance. So from a technical standpoint, there's been nothing to be bearish about. Despite what we're looking at in the headlines and the fundy side of things, let's call it. But I do want to caution one thing. I wouldn't be surprised if we do make a near-term high heading into this month. And what I mean by near-term high is just to trigger a decent correction to the downside, just on account of the breadth of the advance, the momentum that we're getting. I would really like to see momentum at least go for a test of 70 if we're going to continue up towards 50.90 and that median line off the low there. And especially if you kind of teeter out here and pull back, that would be some divergence on a daily basis too, which in commodities tends to trigger some near-term corrections to the downside. So long story short, I'm not touching this until today's close. Let's see where we end up. If we do close or continue to hold above that 50 line, above the high close from April, you have to let this thing run into 48.60 at least. If it doesn't and we pull back, that's like your classic fake out. It's a classic fake out. Again, I'd be looking for a drop right back towards the median line. So today's going to be important for me, specifically in crude here. All right. Joe, what happens to dollar CAD if oil keeps running? Well, specifically, or typically, I would want to say, is obviously, you'd expect some CAD strength to persist. Which is why, like I just said, I think it would be really, really befitting to see this thing spike into a high, or at least make another high and turn around, dollar CAD, pull back a little bit deeper, and reverse to the upside. It all matches pretty well. I don't want to really stress, Kelly, on an intraday basis. If we're talking swing trades or even medium-term trades, that's something you definitely want to take into account. You got to take your timing a lot more serious on those turns. But for the intraday, really close near-term stuff, it kind of all really fits with dollar CAD spikes into a new low, oil spikes into a new high, look for that reversal play near term, and then we reassess. Does that make sense, Kelly? Gotcha. Awesome. Awesome. Pieces of the puzzle are fitting pretty well. SPX, and Joe, I see your question on dollar yen. We'll definitely take a look at that, my man. SPX, I just wanted to highlight, this trade, very clean week, monthly opening range at this point. Here's your May open. We just tested that and failed miserably yesterday. It's funny because the yearly open comes in at the straddle, basically, of the month. And if you guys recall, not to brag or anything, but we called that dollar, that SPX low the day before it hit. So we talked about 2039, 2044 as an area of key support, of which we should expect to see some rebound. We probed just below it. It's like 2036 before reversing sharply to the upside. So that's still the level to beat. It's now comprised of, obviously, the monthly opening range lows, and I think you get a decent play here in the SPX. So while we don't intraday trade this, directional bias on broader, what's the word I want to say? On broader risk is always going to be helpful, right? To know if markets, risk markets, specifically broader equity markets, are on the rise or on the fall. And those risk-sensitive pairs is where we'll look to operate and express that opinion. So that's the SPX. Thanks, Eileen. That's the SPX. Also, dollar yen for Mr. Zhang. Let's see dollar yen. A lesson that I learned early on of why you should keep longer-term trend lines and median lines on your charts. As messy as it can get, and sometimes I'll look at my charts and I'll try to take a step back and say, if I was, if I was one of you guys and I looked at this chart, would I be overwhelmed? And I always try to make sure I'm very mindful of that, to not overdo the charts, guys. But sometimes they come in so helpful. I would never be looking for resistance where we found resistance over the last couple of days if I didn't have this longer-term structure still on my chart. So we're looking for that. I know Jamie's got a really good interpretation on this, and I'm going to point to his chart that he put out last night, because I think he's right on point as far as the near-term sort of advance is concerned. I haven't been following it as much, but the wave count here looks very, very indicative that we should be looking for a little bit more of a stringent rebound near term, and I think that's exactly what we just got. Here's dollar yen on the 30-minute. Okay, so here are the levels I would be looking at, or here are the levels that I presented or showed you guys on Tuesday rather, if you guys remember the webinar. I think it was you, Tony, or Joseph, excuse me, who was asking about dollar yen. And this is kind of super indicative of what the abomination does. Jamie was right on point yesterday by identifying that support. You got a really nice rebound right into the highs, the level to beat, in my humble opinion, still going to be the 109.57 level into 109.43. Nice basic retracement, 618. Let me adjust that. 618 off the high, and a 1618 extension off the low. Nazia says, got stopped out this morning, Sydney time. Nazia on the low for long on dollar yen? She says, yeah, it was a spike low. Same thing happened to me with what position this week? Oh man, it was frustrating. Euro Aus, I think was one of them. I got spiked out right before the market reversed, and you live to fight another day. You live to fight another day. Don't let it get you down. Sorry about that. Hold on one sec, guys. Let's just see if there has any advance or structure to the advance. It doesn't look too bad, actually. All right, so let's adjust this a little bit. Not bad. Now, this is just a drill here for everyone in the room, just kind of to walk you through the process I would be going through as we head into the U.S. Open here. Let's say you get some, or let's say you get a opening range for the U.S. session break to the downside, or you get a decent trigger in momentum. Once you have any type of conviction that this is going to be a near-term high, tack on a basic retracement, and you start to look for support right around those convergences of where the lower parallels start to come into play, and the first basic 236 takes you down here. I wouldn't be looking for a drop quite that low, but just to keep things in perspective, let's work with that swing high from earlier in the week. That's what I'd be looking at near term. Joe, does that help? Again, be weary. Be weary with the dollar yen. But we're basically looking at the same stuff here, coming in some resistance for dollar yen, both from a wave count structure and also from just a near-term technical structure. If you had to trade a yen cross, again, I still would favor sterling yen over dollar yen per se. But those are the levels I would be looking at. All right, covered gold, covered crude. All right, if there are no other questions, or if you do have any other questions, feel free to throw them out on the message board now before we wrap things up. Again, next week's schedule, we come back full time, so hopefully everything will be good and set for that. Tuesday, Wednesday, Thursday, 8:30 Eastern for the intraday webinars. Obviously, Jamie's midweek strategy webinar on Wednesday at 1 p.m. All right, guys, we'll wrap it up here. Kelly, I appreciate that. Always great to be with you guys. I will see you next week, and have a great weekend. Cheers.